If you want a safe investment to complement and diversify your stocks, or just to park money temporarily, then you may have considered a money market fund. In this video, I'll break down exactly what a money market fund is, how to include them as part of a wider portfolio, and also some of the best money market funds available to UK investors right now. Their purpose is to provide a return that's slightly higher than what you could expect from holding cash at a bank. They're designed for investors who want a safe, low volatile place for holding cash temporarily, or to diversify away from stocks. They sit somewhere between your typical investment grade bonds and cash in terms of risk. They invest in things like very short dated bonds and certificates of deposit. That would be where a bank offers you a fixed rate of return for investing money for a specific period. But the advantage with money market funds is that they offer you liquidity. There's no waiting for those lockup periods. You can access your money within a couple of days. The short-dated bonds are fundamental to a money market fund. A key risk when it comes to investing into a bond is duration risk, where the longer the time to maturity, the more time that bond has to fluctuate in price, therefore increasing its volatility. So if you have a 30-year bond, you're going to get paid an increased yield to compensate you for that volatility. But a money market fund is not all about creating the highest yield. It's about producing a low volatile investment with a stable yield. They should be seen as a short-term product. They're where you're parking cash temporarily. It could be that you're coming up to retirement or you're about to make a big purchase like a house. You could also potentially use them as an emergency fund. But over a longer period of time, say 5 years plus, you're more likely to get a better return investing into the equity markets, where you can take on a little bit of volatility, but you're going to get an enhanced return. And actually, by using a money market fund for a long period of time, you are taking on a little bit more risk because, of course, it is going to be eroded by inflation. So you need that enhanced return from the equity markets if you've got a longer time horizon. When it comes to regulation for money market funds, they're regulated under a European regulation called UCITS in a similar way to open-ended mutual funds. And that means there aren't actually any ETFs that can be a money market fund. I wanted to highlight that because you will see some ETF providers describe their fund like a money market fund. And while very similar, they are technically different. On Just ETF, there's even a section classified as money market, and there's 14 available for UK retail investors right now. You've then got an option between different currencies. So you've just for simplicity's sake, we'll select GBP, and there's 3 that is available. These are very short dated bond funds, essentially, but they're not technically money market funds. They work very similar, but I just wanted to highlight that just in case you thought that you were investing into a money market fund. Actually you're investing into a very short-dated bond ETF. So when looking to compare money market funds, we need to use a platform or a provider that offers mutual funds. Generally, a provider that has mutual funds will also offer money market funds. Hargreaves Lansdown offers money market funds, and they've got a whole section on their website where you can read more into money market funds. They've also got a fund finder, and this is where you can filter by different funds depending on your preferences. So to find money market funds on their website, if you click on sector and then scroll down to short-term money market funds. So here we've got 12 options from different providers. And the first thing you'll notice is that for each fund, there's generally an income version and an accumulation version. So accumulation is where you have the income automatically reinvested. So if you're just parking cash, then generally you want accumulation because you just want that money to grow for you. If you're using this to create some income and you just want the yield, then of course you then go down the income route. What you'll notice when you look at a lot of money market funds is just how similar they are. And this is a key thing when choosing them, is it's mainly about the provider and the cost. So if we look at the cumulative performance, for example, if we compare all of them, you'll see how close they all are over 1, 3, and 5 years. Some of them might not have performance for 3 and 5 years just because they're fairly new funds. You'll see over 1 year, they're within a few basis points of each other. And that's because they're not competing on yield. The main objective of a money market fund is to have low volatility and to produce a stable investment. That's where they have their value. So the main thing when looking at money market fund is how much it costs and the reliability of that provider. So if we look at charges and filter by the ongoing charge, you can see they're around 10, 12, 15 basis points. So they're all fairly cheap, but this is going to be the main determining factor, I believe, on choosing a money market fund, as well as obviously trusting the provider. So you've got companies like Royal London, JP Morgan, Vanguard, Legal & General, Fidelity. And while Hargreaves is very good at comparing these at a high level, and of course you can also use their platform to invest into these funds, if you want to find more information about a specific fund, you're better looking at that provider's website. So this is Vanguard's offering, and it's the Sterling Short-Term Money Market Fund. When you're looking at a provider's website, I'd say there's 2 main things that you want to consider. The first is the charge, how much you're going to pay to invest into the fund. In this case, it's 12 basis points. The other thing is looking at the portfolio data and seeing what the money market fund actually invests into, and also its weighted average life. That's really key. So in this case, it's 44.8 days. And it's that short nature that gives it its low volatility. The main risk for a money market fund is the risk of default from a bond issuer or the issuer of a certificate of deposit. And it's the short dated nature of these investments that make that a low risk, because a fund manager, if they invest into a bond that say has 2 months to maturity, they'll usually be able to tell whether there's a risk of that creditor defaulting. You can also see a breakdown of exactly how long these investments have got until maturity, and you can see how short term they are. The largest portion here is under a week until maturity. You can also see a breakdown by issuer. So the largest portion for this fund is UK Treasury bills, so that's government borrowing. You've got time deposits, which are certificates of deposit where the bank offers you that fixed rate of return. And then you've got commercial paper, which is very short-term lending from high-quality companies. And finally, you will find money market funds in different currencies. But if you invest into a different currency to your home market, you are also adding currency risks there. And the whole purpose of a money market fund is, of course, to be a stable and low volatile investment. So you want to reduce any risks you can. So it makes more sense just to invest into GBP if you're a UK investor. So this is mainly going to come down to the money market funds that your provider offers. As long as they're a big name brand and the fee is not too much, anything over 15 basis points, I would just ignore, because you're looking at fairly low yields. So if you're looking at 20 or 25 basis points, of course, that's going to erode into that yield. But if they're around 10 to 15 basis points, then you can't really go too wrong. Let me know, is this slightly enhanced yield worth it over just investing cash in a bank account? Or do you prefer a very short dated bond fund? What other alternative methods do you have for parking cash? Let me know down below in the comments. I hope you found that useful. I'll catch you in the next one.